Looking ahead to the trading week beginning May 26th, first off, remember it will be a holiday shortened week. Even though some markets are closed on Monday, Tuesday starts a data heavy and geopolitically charged week that could shape sentiment heading into June. One of the key themes will be tariffs and the European Union, as the administration threatened very large tariffs against the EU late last week, possibly with an eye toward jump-starting negotiations that seem to have been stalled. Negotiations are continuing over the weekend, and progress or lack of progress could spill over into bond markets, commodities, FX, and equities. In that context, $183 billion of U.S. Treasury issuance across 2-year, 5-year, and 7-year notes is happening next week in the U.S., with the backdrop of a surge in long-end yields late last week. The 30-year yield jumped 14 basis points last week, lifting the 2s 30s yield spread to 111, its widest in months. The 2s 10s and 5s 30 spread also steepened, hinting at rising concern over the trajectory of fiscal policy and possibly inflation. The centerpiece on the inflation front is Friday's April PCE report. Markets expect core PCE to rise 0.2% month over month and 2.7% year over year, while headline PCE is expected up just over 0.1% month over month. Those numbers would suggest inflation is still above the Fed's 2% target, keeping rate cut hopes in check. Several Fed speakers might comment on that next week, including New York Fed President John Williams, Fed Governor Christopher Waller, Atlanta Fed President Raphael Bostic, and San Francisco Fed President Mary Daly, as well as Minneapolis Fed President Neel Kashkari.